Palantir, we're going to talk Palantir at the top of this video. Huge. I was shocked when somebody just sent me over something in regards to Palantir. So we'll speak about that. Then we're going to talk about Palantir's earnings, if I expect them to miss earnings, beat earnings estimates here, and kind of where I think the stock price is going, those sorts of things. Okay. Then I'm going to go ahead and react to this video here. Meta is too optimistic on revenue and cost growth in 2024. Thought that would be an interesting one to react to and watch there. Then we're going to react to this one, this little clip here from Tom Lee on his views of the stock market. So we'll react to that. And then last up here, Jensen Huang, the CEO of Nvidia. We're going to hear him talk about kind of demand and how things are looking there for Nvidia. Okay. Appreciate y'all joining me as always. Thanks so much. Only thing I ask is make sure you smash that thumbs up. Make sure you subscribe to the channel. New all-time high subscribers in the history channel. Appreciate each and every one of you. Okay. So first off here, it was interesting because, a lot of people had been asking me on Twitch when I was doing the big Thursday live stream, which was Meta, Amazon, Apple earnings. A lot of people were like, hey, you're going to live stream Palantir's earnings on Twitch. And I'm like, no, the next time I'll live stream will be PayPal's earnings on Wednesday. And the reason I was saying that was because I assumed that Palantir was doing a morning earnings release, right? Which comes out at like 5 a.m. Vegas time here, and I'm not waking up at 5 a.m. to do a live stream of Palantir's earnings. So I was like, no, I'm not going to do that, okay? I just found out literally right now, it's after hours they're doing their earnings, okay? So nonetheless, we will do, yes we will folks, we will do a big Twitch live stream for Palantir's earnings on Monday after the bell, okay? So I'll probably start going live maybe 30 minutes to an hour before the market closes. We'll wrap up kind of the market close there, and then we'll go straight into Palantir's earnings, and we will listen to a conference call live on there as well, okay? So yeah, if you want to join me for that, pin comment down there to join me on Twitch. Yeah, I thought it was a morning release, and I'm like, okay, I'm not waking up at 5 a.m., but yeah, afternoon, we got that, baby. That's in the bag, okay? Now, speaking about in the bag or not in the bag, okay, Palantir's earnings. Is a company going to miss earnings, or are they going to beat earnings, in my personal opinion? Well, okay. First place I want to start here is if we take a peek at where this, how this company's done recently, okay, we're going to be able to find that last quarter, they beat by 1 cent on EPS. They did 7 cents, okay? And they also beat slightly on revenue, but very slightly. Now, the previous quarter, they slightly $550,000 they missed on revenue, and they basically came in line with EPS the previous quarter. Now, the previous quarter before that, they beat by 1 cent, and they beat by about $19 million. So that was a nice beat there, okay? So overall, and by the way, they had a really bad stretch there in kind of the end of 2021 into 2022. There was just a lot of EPS misses back to back to back to back. So when I look at Palantir, one, I see a kind of an inconsistent earnings beating story here, okay? It's getting in the right track, but we're still not quite there where Palantir is quite that company you can say, oh yeah, they're coming in, they're killing it quarter in and a quarter out, okay? There's several of those stocks out there, and those are some of the best stocks in the world that you can pretty much count on quarter in and quarter out beating analyst expectations, earnings per share and revenue, and you're just like, dude, they do it every single quarter. That's the best of the best. Palantir hasn't quite gotten to that level yet, so we can't be too confident in regards to them beating earnings, okay? But when I look at estimates here, okay, I feel very comfortable with the EPS. I expect them to either come in line or beat that EPS. I'm thinking about the company's now turned to operating income versus operating loss previously. They're now obviously still bringing in all that treasury money, so I think 8 cents is in the bag in terms of, at least coming in with that number. But is it potentially do 9 or 10 cents? I think it is definitely a potential, okay? So I don't think there's a very high probability at all they miss EPS. I would be shocked if they missed EPS. Shocked if they miss that 8 cent number. I'm expecting probably 8 to maybe 11 cents, somewhere in there. 8 cents kind of being the worst case scenario. In terms of revenue, I think that's pretty realistic. Now, next quarter, okay, I think they got a pretty good probability of coming in ahead of next quarter's revenue estimates. Analysts have them at 17.5%. I honestly think they're going to do 20% plus every single quarter for 2024 overall. So that's where I think they're actually low, because all this AIP excitement and kind of all these new customers that they've been attracting in 2023, a lot of those customers are going to start to bring in revenue in 2024, where in 2023, it was just kind of getting to know Palantir, using their products and services, and kind of getting to know more about the company. I think in 2024, it's actually start like coming in with money, okay? So I'm expecting 20% plus every single quarter in 2024. So that's kind of my opinion there. And then 7 cents, I think that EPS number is way too low for next quarter as well. I think that's probably a 9 cent to 12 cent quarter next quarter there, okay? So that's my 2 cents in regards to Palantir's earnings there and everything going on there. And by the way, if we go back to their first quarter of last year, it wasn't the most exciting quarter there. When you look at the numbers overall, they had revenue growth, but it was about, if I recall, 18%. Yeah, total revenue grew 18%, so it wasn't some crazy quarter there, okay? So that's the moral of the story in regards to Palantir, okay? Now, one other question let me answer, okay? Now, if the stock falls, will I be buying the stock? I'll say this. If the stock falls in any considerable manner, as long as I like the earnings and I like the guidance, I'll be buying the stock if it falls. But if I had to say, I think there's a higher probability it will go up on these earnings than down, especially if they come in with a really strong guide. And if all of a sudden the company says, we're thinking 25% plus revenue growth in 24, dude, that baby's flying. That baby's flying the next day. I mean, when I say flying, I'm talking like 20% plus move the next day. If they come in and say that, I don't know. We'll see. But if CARP comes in and says, yeah, we're going to get back to, I think 25% plus for 24. Oh my gosh, because all the analysts are under 20% for every single quarter. So all of a sudden, if you're talking 25% plus, then you also have to adjust your EPS numbers, right? Then you also have to adjust your full year numbers, and you likely then have to adjust your 2025 estimates as well. So everything gets more bullish, right? And then you also say, well, if the company says 25% plus, then obviously everybody thinks they're going to probably beat that at that point in time, right? So I don't want to get too excited, but just that's the story there. Now, obviously, if they came in and said something bad, they'll take the stock down. But I think if anything, there's more upside risk than downside risk in regards to Palantir here. Meta is too optimistic on revenue and cost growth in 2024. What?
All-time high today, jumping 20%. Huge move after the company reported a tripling in profit for Q4 and announced that they would pay investors a quarterly dividend for the first time. Despite this, our next guest has given the stock an underperform rating. Here to discuss is Laura Martin, senior analyst at Needham & Co. Laura, it's always great to have you on the show. And that is exactly where I'm starting this conversation with you. Why do you continue to be underweight on Meta?
Right. So what we're looking for in 2024 is three things that we think are not currently invested in the consensus estimates. One is capital spending rising because he's going to try to compete with the big large language models like Amazon's AWS, Bedrock, and Google's and OpenChat. So then also his headcount.
For those that were wondering how much was I up on Friday on good old Meta, there it is. It was $145,000 in the public account. That's a public account. $145,000, almost $146,000 on Meta shares. So, yeah, it was a good one. Let's just put it that way. It was a good one. I mean, never mind, other accounts and things like that. It was exciting.
22%, and he said he's going to start hiring people again. So we're going to get higher people costs as he continues to fund the metaverse. He said his Reality Labs loss is going to go from a loss of $16 billion in 2023 to material or higher. We're using a $22 billion loss, so that's a big cost. Wow, and then finally, on the revenue side, they said on the call that China advertisers added 500 basis points to their growth, so they would have reported 11% growth in 23 instead of 16% growth for the full year. They're about to anniversary those tough comps. So I think it slows revenue growth next year. And I just don't think the estimates really capture that. I think they're too optimistic on revenue growth for 24 and too optimistic on cost growth.
Okay. So basically.
Ooh, okay. So two things here. Okay. First, she's down Zuckerberg. She thinks she knows Meta better than Zuckerberg knows Meta. That's interesting. That I would doubt a lot of CEOs out there, but I don't know about Zuckerberg. Okay. Second thing is something huge no one has factored in. And I mean, no one has factored this in. And I'm just looking out there. I'm like, it seems so obvious to me, but no one's factoring this in. Okay. Listen, guys, have you seen all the Vision Pro commercials that Apple's doing all over the place all of a sudden? I was watching the championship games, NFL games last weekend. Sure enough, they were running commercials on that. Don't be surprised if you see a Super Bowl commercial, Vision Pro. And so Apple's now marketing Vision Pro super heavy. Their stores are going to be, marketing all around Vision Pro and all these sorts of things, okay? Listen, this is the best thing that could ever happen for Meta's Quest 3 product, because we got to bring awareness to the space that these products even exist. Like, oh, people are actually trying them out. People are actually buying these things and things like that. So Apple is Meta's best friend in this situation because they're bringing awareness to the space when a lot of people weren't even aware. So now people can kind of look at this Vision Pro and be like, wow, kind of cool, but gosh, it's almost $4,000 after tax. Oh boy, I don't know about that, right? And so then they start looking at alternatives, right? And all of a sudden you see Quest 3 there, and you start looking at reviews of Quest 3, you start watching YouTube videos on Quest 3, and you're like, dang, that product looks pretty phenomenal. And it's $499? Oh, that seems a lot more compelling. And so, naturally, right, a lot of people will buy Quest 3 that never even came through the Quest 3 funnel at first. They came through Apple's funnel, realized, oh my gosh, that price is crazy, with a 2 to 3 hour battery life or whatever horrible battery life it has, and then you got to have it wired in and everything. It's all ridiculous, right? And so all of a sudden they're going to look and they're going to say, oh, that seems like compelling. That seems interesting. What else is out there for options? And so I think that's the best thing ever for Meta in regards to kind of their metaverse opportunity here. That Apple's like their best friend, in my personal opinion.
This was a peak report in terms of some of those key financial metrics, it sounds like. But they did initiate this dividend, and they also just rolled out.
You got to be scared of Apple if you're already super successful in a space, and then they bring a product in. So a good example of that is remember Fitbit? Fitbit, very, very popular. Then Apple Watch came out, right? Ooh, big competitive threat there. That's not what you want, because Fitbit already had a huge market at that particular time. It was already a big thing, right? Whereas I still put Meta Quest 3 into a very niche category. That whole entire space around VR and AR needs a marketing boost, and Apple comes in and brings that marketing boost, right? But the difference between Apple Watch and this product that Apple is putting in the market, the Vision Pro, is the Apple Watch was everybody could look at that and be like, dang, that's impressive. Vision Pro, no. When you look at that price point and then you look at the feature sets and the fact that it's got to be wired in, they missed big on that. Big. And so, yeah, and you watch a few videos in regards to it and you realize, oh boy, Apple usually gets it right. But the Apple we're always used to releasing products is a Johnny Ive and Steve Jobs Apple. That doesn't exist anymore. Neither one of those guys have anything to do with the company. So Vision Pro has nothing to do with Steve Jobs. Vision Pro has nothing to do with Johnny Ive, which you cannot say that for any other big successful Apple product. The Apple Watch, the iPhone, the iPad, the MacBook, all those products, even the AirPods, all Johnny Ive, Steve Jobs related products.
Their big buyback. The dividend specifically is going to expand the investor base, create more demand.
I agree, but I think the other thing it tells you is they realize the Congress will not let them buy anything. There is no other use of cash other than building their businesses and hiring people to build out the metaverse and generative AI. But they're never going to be able to buy anything because Congress just won't let them, the regulatory agencies. So that's sort of bad. You and I would prefer to be buying companies that can buy fast startups to jumpstart there instead of building everything from inside.
So I disagree. And when I say I disagree here, I disagree with the notion of it being bad that Meta can't buy anything. I think at this point in time, it's better Meta doesn't buy anything and tries to build everything in-house. The reason being is now if you're Meta and you approach somebody, right, to buy them out, they're going to want such a ridiculous price. You know why? Because Meta's had two of arguably the most that was weird, balloons. Meta's had arguably two of the greatest acquisitions in the history of business. WhatsApp, getting that guy for, what was it, $19 billion. And I mean, WhatsApp is just like that as a standalone product's going to be worth I would say probably $500 billion long term. And then they bought Instagram for $1 billion. And Instagram today, you could value that at several $100 billion. And they bought it for $1 billion. So they had two of arguably the greatest acquisitions in history. So if Meta comes to you and approaches your business, your app, whatever, as they're interested in buying you out, what are you going to do? You're going to be like, I want 10x. Whatever you say you're going to try to give us. You say you're going to give us $10 billion. I want $100 billion. I want $50 billion at least, right? Because you're of the understanding that you're not going to approach unless they think this is a 10x, 100x, 1000x opportunity, right? So that's kind of my 2 cents in regards to that.
Laura, you got to admit, it would have been better if you had a buy on it and just went to an underperform today, right?
Yep, absolutely. Absolutely the wrong stock call today. Absolutely true.
So what did you read wrong about Meta?
I like John Ford. Nice. Good for calling her out. She's already was bearish on the stock. Didn't have a buy
on the way up, right? That you learned from, that you think now you're right that it's going to be headed on the way down.
Right. So, I mean, I think what happened was he cut 25% of his total employee base. I actually didn't think that was possible in a human capital based business where morale is such an important indicator of who you attract next. I really just didn't think you could cut that much, 25% of your headcount. And that's what he did. And the other thing I really like about this CEO, he's the CEO I've covered that's really willing to pivot on a dime and say, I made a mistake. And he said that last night on the call. He goes, I thought we could do a specific large language model. That's wrong. We got to do a big one. We're pivoting. And that means a lot more costs and a lot more CapEx. But I really think it's the right long-term decision. And I think he's learned that over the last year. So I think he's good at pivoting to what the market needs when he's proven wrong.
Yeah, you've also said that Google, that Alphabet is your top pick. I wonder, in a week where we saw that stock actually sell off, finish the week down about 6.5% after investors really sold, in part because of what we're seeing as some misses or some softer than expected results around the advertising, whether you stick with that call too.
Yeah, definitely. Really like Google because of its strategic position. First, it's got cloud. Then it's got 3 large language models that are proprietary. Its cloud business has a $20 billion backlog, had over-delivered both profits and revenue compared to consensus. And I just think what's about to happen over the next 3 years is we're going to see all these generative AI applications essentially redefine corporate winners and losers in the American economy. And the early adapters of generative AI are Google, who mentioned generative AI or AI 65 times, Meta mentioned it 50 times, and Amazon 25 times. These guys that are cloud providers and building large language models are going to be the backbone of like surviving American companies over the next decade.
Laura, Apple ended the week down after earnings, but it also...
Before we go further here, do I like Google stock right now? Do I like Google stock as a buy right now? The answer to that is yes. I do like Google stock as a buy. I think the valuation is very fair. Do I think Google stock's the most attractive risk reward in the stock market? Absolutely not. But do I think Google stock's a buy here? Yes. Okay. You know, anything under 150 is kind of like just easy cleaning up shares money-wise in regards to good old Google McDougal there.
The Vision Pro, did it deserve to be down?
Yeah, it did. I mean, first of all, the prepared remarks, not a single mention of AI or generative AI. They said they'd get to it later. And it sort of feels like this annual, sort of release cycle that that Apple has in its hardware feels really sort of out of proportion, given that Meta and Google and Amazon are all saying, hey, we have a dozen products that use generative AI today. And they're really interesting products when they tell you what the use cases are they're finding for these. Feels like the pace of innovation driven by this disruptive technology called generative AI is going to be really fast. And that annual updates feel a little too slow in the competitive environment to us.
Yeah, so, I mean, in regards to Apple, right? And then we'll get to Tom Lee here. Looking forward to getting into Tom Lee. So, in regards to Apple, like, why should you expect anything different? Why should you expect Apple to be the big innovator when they don't have Steve Jobs or Johnny Ive? The whole company, everything is built off those two guys. Everything that's made them successful. The App Store, which is all the services they have today, the Apple Watch, the iPhone, the iPad, the MacBook, the Mac, the whole dang thing. So to expect that company to then be the super innovator to try to keep up with Zuckerberg and Meta, to try to keep up with Jensen and what they're up to at Nvidia. And I just don't think that's the DNA. I don't think that's the team. I don't think that's the company. I think Apple's a great company for what they do and just trying to, make their products a little better and a little better. But to now, expect them to win the next 10, 20 years, it's going to be really difficult for that company because they don't have their two super innovators, the two guys that put them in this place. So, now, and you can't just recreate a Steve Jobs. You can't just recreate a Johnny Ive. That doesn't just happen like, here, we'll put this guy in his place. He's our new Johnny Ive. It doesn't work like that. Those are special once in a generation type business people. And so, I don't know, man, Just don't expect companies to do things that you're not used to them doing if they've never done it before. Next one up here, Tom Lee, the stock market is getting stronger.
The tape, what it will take to keep stocks moving even higher from here. Let's ask FundStrat's managing partner and head of research, Tom Lee. He is with us live today. Tom, welcome back.
Thank you, Scott. Good to see you.
Yeah, you too. This is a remarkable market. What is driving this, and what is driving this continued acceleration as we hit this final stretch today?
Scott, I think 2024 is revealing the stock market is getting stronger because it is proving to be extremely resilient. Last week Tesla fell 11%. The S&P was up for the week. This week we had two big fangs miss and disappoint, and the market's, of course, roaring as we end the week. It's the 14th consecutive week. I think it has a lot to do with, one, the economy's incredibly resilient. The Fed, I think, has turned dovish. We don't know the timing of the first cut. Inflation, I think, is falling basically like a rock. And we know there's a lot of cash on the sidelines because there's over $6 trillion sitting in money markets. And yet the S&P, is just in the last 6 weeks generated more return than an entire year of owning money market cash.
Yeah, it's been unbelievable. So March doesn't matter? I mean, is that the lesson of this week?
Yes, I think, I think the bond market really cares whether it's May or March. I think that the stock market really should just care that the Fed has gone from fighting inflation and almost giving the economy a heart attack to one where they're trying to manage the business cycle. So if they don't feel comfortable doing this cut in March and instead of May, I don't think it should have any effect on equities and how they do today.
The interesting part, I guess, is what you allude to. It's sort of this change in focus of the Fed. And I think Chair Powell alluded to this as much in the news conference when he cited, I think on multiple occasions, the strength of the labor market is not necessarily a bad thing anymore, so to speak. They don't feel perhaps as though they need to really lean on that to get inflation to come down because they've been surprised to the degree that it's already been coming down.
Yeah, that's right. I think the biggest evidence this week was the ECI, the Employment Cost Index.
Let's go ahead and take a look at one of the most important things in the entire stock market if you want to understand what's going on with inflation, okay? Here we go, baby. I'm going to show you it right now. Okay? So, GSG, the commodity index, arguably the most important thing if you really want to understand where inflation's going. It's GSG. This is a commodity index. It's, a good gauge on what's actually going on in the commodities market. And this is a 1 year on GSG and has gone absolutely nowhere. It's down a little less than 1%, right? Down about 0.5%. So that right there, folks, is very, very important. If this was spiking up huge, all of a sudden it's 23, 24, 25, 26. You might want to start to worry about inflation. Inflation could be coming down, coming down the road, right? If, it's staying kind of flatlining, that's pretty good overall. If it's crashing completely, then maybe you're in a recessionary environment, right? But we went through one of arguably the biggest bull run in GSG in the history of GSG. I mean, that was ridiculous, right? All the way from those lows in kind of April of 2020, all the way through the peak there in around summer 2022 is ridiculous. And those days are long gone. So, and if you look overall, we could potentially still come down in GSG. I mean, a high GSG before Rona was 16 there, right? That was kind of elevated ranges prior to that. Right here was 2018, and we were at 18 there for GSG, right? And that was a peak in 2018. Right here was a peak, 18. So you were looking at a GSG at 20. Keep in mind, folks, we could still come down to 16, 18 on this baby and not even be in a recession necessarily. If we are in some sort of, next time we're in a major recession, this baby's probably going to 10, I would say, somewhere around there. But keep in mind, there's still room for downside in regards to GSG. If I had to guess, I would say it would probably go up a little bit. I would think over the next, 6 months, as I think oil prices will do decent over the next, 4 to 6 months. But, B-Man in office, I think he's going to try to, have as much fracking going on in oil production as possible going into, the big election there. So I don't know, man. We're looking pretty good. That's all I'll say about that.
It came in very tame, and Fed Chair Powell barely mentioned the labor market in the last press conference. I think it's because the job market is still adding jobs. I mean, today was a big surprise, but the unemployment rate's not really falling precipitously, and it's not creating a lot of wage pressure. So far, I think the labor market isn't going to be the source of the concern for the Fed.
Yeah.
Well put, Tom Lee. Well put. Okay. Nvidia, Jensen Huang, one of the most important, if not the most important CEO in the world right now.
India, Japan, France, Canada now, Southeast Asia, Singapore, speak up about the importance of investing in sovereign AI capabilities. It is become abundantly clear to each one of the countries that their natural resource, which is the data of their country, should be refined and produce intelligence of their country for their country. And that capability of refining the data of their country and turn it into their artificial intelligence is now possible in a quite a democratized way. Almost every country should be able to do it for themselves. And what's needed, of course, is the technology and the know-how of standing up AI infrastructure, and that's where we could be quite helpful to various regions. And so I think that the recognition of the importance of sovereign AI capabilities is now quite global.
Jensen, does that recognition and your ability to help extend to China?
Well, we're an American company, and we have to comply with American policies. And whatever the rules and regulations are and the laws are, we'll, number one, comply with that. Work closely with the regulators and understand their intentions and their desires, work within those boundaries, and be able to create products for.
So what's the important first part? What should you take away from that first part there? The first part, the important thing to kind of take away is that's basically Jensen kind of saying without saying it, governments are going to be ordering a lot of chips from us. Governments are going to be ordering a lot of chips from us. It's not just companies, not just businesses. It's going to be government-related entities as well, okay? So, that's a way of saying it without saying it.
Various countries that are involved fully in compliant with the regulations that are in front of us, and beyond that, once we comply, our goal and the United States would love to see us be a successful country, and one of the pillars of national security is successful industries, and it creates jobs and allows our country to stay ahead and technologically, and so it is of great interest of our nation that our American companies are successful around the world. And so once we comply with the regulations,
it's funny they didn't take the audio out of the background there of the little video clips. That's hilarious.
To serve the local markets. Artificial intelligence, or the automation, the production at scale of intelligence, matters to every single country and matters to every single industry. And so for the very first time, there's a whole new computer market that is going to be in every single country and every single market, and it starts with, of course, the native computer industry itself. But you're seeing a great adoption in healthcare, great adoption in logistics, in transportation, of course, in manufacturing, in the large industries, the heavy industries. For the very first time, because of generative AI, computer technology is going to impact literally every single industry in every single country. And so the markets are going to be quite large and global.
So, the important thing to understand about that, right? He's mentioned these specific industries. And, by the way, make sure you follow me on Twitch, pin comment down there so you can join me for the Palantir live stream on Monday. But the important thing to understand there is, when he says like logistics companies and, their importance, or a trucking company or whatever, right? It's not like necessarily the logistics company, the trucking company is going to be buying a massive amount of Nvidia chips, straight from them. They might leverage an Amazon for that, or a Google for that, or a Palantir for that, right? Or a Snowflake, or, there's different other companies that can kind of serve your needs. And so it doesn't necessarily mean that particular individual company that might be a $300 million company doesn't necessarily mean they're going to be loading up on Nvidia chips. It's more the big guys are loading up on chips, the software providers, the back-end providers, and then those smaller businesses, right, can utilize all that technology there, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed, folks. Looking forward to Monday after the bell, big live stream, Palantir, baby. And then Wednesday, PayPal. Woo-hoo-hoo-wee. It's going to be a lot of fun. Much love and have a great day.